How did I make nearly 500 pips in 3 trading days? That's what we're going to talk about in this video. You don't have to trade every day to make money. You just need to trade the days that your trades have the highest chance of winning, the greatest chance of success. On my channel, we talk a lot about knowing when to trade and knowing when not to trade, because avoiding losers is the same as making winners. On any given month, there are days, weeks full of big market moving events like non-farm payrolls, the US Consumer Price Index, which is the inflation report, the Federal Reserve and European Central Bank interest rate decisions. Now, it can be very tempting to trade these big events, and there will be opportunities, but you have to know how to do it right. And that's what I'm going to talk about in this video. Hello everyone, I'm Kathy Lean with BK Traders. We at BK Traders teach people how to trade with fundamentals, how to follow the big stories in the market, tips on market structure like best and worst times to trade, trading strategies, and of course, prop industry news. You won't want to miss any of these videos, so make sure you subscribe to our channel, hit the notification button for updates so that you get the videos when they are released. Now, before I continue, I have to say that all of this information is for education only, and past performance is not indicative of future results. Use the information as you see fit. Now, I will show you how I combine fundamentals with technicals around major news events to select the best trades. First, though, let's talk about what a 500 pips in 3 trading days really means. Pips is the term for points or points in percent in the Forex market. It's basically lingo in FX. I trade currencies. Boris, my trading partner, trades gold and indices. But in FX particular, 500 pips is basically the equivalent of 5%. Now, in the world of Forex, many traders trade with leverage. The max is 50 to 1 on majors and 20 to 1 on non-major pairs here in the US. And abroad, it may be, and it generally is, more significant than that. Leverage is risky. It can compound your profits, but it can also magnify your losses. Let's imagine that you're using 10 to 1 leverage, which is less than the maximum provided. 500 pips in that case, or 5%, is approximately 50% gains in 1 week. So my trading strategy is called ZIP. The concept is simple, and the strategy can be used to trade gold, indices, and other instruments, but I use it for Forex, and I've been doing this for more than 10 years with ZIP only. I've coded the strategy into a trading view indicator. Now let's take a look at how the ZIP indicator works. It's very simple. When the background is green, it means that the long-term trend is bullish. And when the background is red, it means that the long-term trend is bearish. When the currency pair is trading above the indicator line, it means that the short-term trend is also bullish. When it's trading below the indicator line, it means that the short-term trend is bearish. So what you want to see is ideally, the currency pair be above the indicator line and the background be green to buy, and it be below the indicator line and the background to be red to sell. Now, the best trades are the ones where we have our ZIP trades, ZIP signals, where we have the white candles. And if we're going from below the indicator line to above the indicator line and the background's green, these candles will be white with a green background. And these are basically your indications to buy. This is a buy signal. And then we also have a buy signal right here. Now, we will trade when it's just in the green zone above the indicator line, as you see some live charts later. But this is how you use the ZIP indicator to the long side. On the short side, when the background is red, it means that the longer term trend is bearish. And if it's below the indicator line, it means that the shorter term trend is bearish as well. And this is a ZIP sell signal, where we have a white candle with a red background in the Eurodollar, and you can see that this correctly signals a very nice move lower. Now, there are some wrinkles to the strategy. There are certain times of the day that I don't trade the strategy, and also sometimes the days of the week that I don't trade the strategy. So that's part of learning what works best for your trading strategy. And in my situation in particular, that would be ZIP. There are 2 ways to get my ZIP indicator and trade ideas. Become a BK trader. There's a big discount link in the description of the video. Or if you're outside the US, you can open and fund a new 8-cap trading account. The link is in the description below. Now let's take a look at the trades and how I combined fundamentals with technicals to make 500 pips in 3 trading days. I only traded 3 days last week because I don't trade on Mondays, and that's because the chance of continuation on Monday is basically 50-50. And I personally like odds much higher than that, like 70, 80, 90%. And I don't trade ahead of US inflation data, the consumer price index, because it's such a big release. Now let's take a look at the trades. So the week started off with my first trade on the 8th of April, which was a Monday night, which basically is Tuesday morning. So I told you that I don't trade on Monday during the day, but this is the Asia session of Monday, which basically is Tuesday, and that's when the momentum and the flow in the market really gets going. So on this day, I put out a short Euro Kiwi trade, 179.65, a stop, a trailing target. I explain why, I show the chart. We previously had a zip sell signal, as you see right here, but we're in the zip sell zone. And I explain how the ECB is expected to deliver a dovish hold this week, and the RBNZ is expected to keep policy steady, resist lowering interest rates. Now that we're after both events, we can see that both was true, and that's exactly what happened. But, I don't trade ahead of the ECB unless it's many days before, because when you go right before the event risk, what ends up happening is that you tend to have less movement and more consolidation as traders kind of already adjust their positions for the rate decision itself. So in this case, we traded on Tuesday, which is 2 days before or a day and a half before the ECB meeting. So it was under the expectation that I thought that Euro was going to be weak and Kiwi was going to outperform ahead of these two rate decisions. So we put that trade on. Then we also sold dollar yen. Now this one actually broke my rules, I'll admit. And we sold dollar yen even though it was in the zip buy zone. And you'll see how that worked out. But we had the Euro Kiwi trade on at 179.65. Here you can see I moved my stop to break even, and then I continued to trail the stop, and we ended up making 80 pips on the Euro Kiwi trade. And then I did sell. I closed dollar yen at 150.185. I broke my own trading rules, closed the trade, and that was the best decision I made because dollar yen went much higher than that. Now back to the real setups, the trades that I should be taking. So on the 10th, which is the day before the ECB and after the US inflation report, this is 8:35 a.m., we sold Eurodollar at 107.96. This is the perfect zip sell signal right over here. And we sold Eurodollar. My explanation was hot CPI report. I thought the ECB was going to be dovish. We had a Eurodollar zip sell signal, and then it was below all of the major moving averages. So we had moving average clearance on the daily, 4-hour, and 1-hour chart. So we ended up managing this trade and ended up closing Eurodollar for 90 pips. So we made 80 pips in the first Euro Kiwi trade, lost I think 16 pips on dollar yen, and then made another 90 pips on Eurodollar. And then we took Euro yen on Thursday night, which is Friday morning, after the ECB, after the US inflation report. So I traded, basically the point I want to make is we had a lot of big event risks this particular week. US inflation data, ECB meeting. And we did take trades against those risks, but only afterwards. After the data was released and after, the events transpired. And we sold Euro Yen, 164.30. It was in the zip sell zone. So it was below the indicator line, background was red. Perfect. And I gave the reasons for why we sold it. And in this case, Euro Yen hit first target, moved the stop, and then we ended up banking 149 pips in Euro Yen. So in our swing trades, we ended up banking 303 pips. And on top of that, we had a number of day trades. And day trades, we made 173 pips for day trades, for a total of 476 pips that week. And with day trades, we tend to have a lot more day trades. Like you see in the session here, we started off the evening with four different day trades. And actually, all of them ended up working out, but I did close some of them early. But this is an example of, the day trades that we took. And the point that I want, and they all come with charts and explanations. But as we wrap up the day, wrap up the week, we ended up 173 pips in our day trades and 303 pips in our swing trades. This was a very, very good week for ZIP and one of our best weeks in a while. But we have winning weeks all the time. And, we've hit our profit target of 100 pips a week and exceeded that for many weeks in many of the past few weeks. So that's how I combine fundamentals with my zip strategy to make 303 pips on our zip swing trades and over 470 pips on our zip day trades. Don't forget to subscribe to my channel. If you want to get my zip indicator and trade ideas, check out the description below for a big discount link, or open up and fund a new 8-cap trading account if you're outside the US. The link is in the description below, and let them know you want Kathy's BK trades.